Hello, this is Mijun from the University of United States Stock Theory. Let's begin today's United States stock news for July 14th. Welcome once again to Mijun, where we consistently uphold the fundamentals of United States stock investing. First of all, I'd like to thank everyone joining us for the first broadcast of a new week. And starting this week, the Mijun YouTube broadcast will be a bit shorter. Also, there may be days when I take a break from broadcasting without prior notice. Since there are only about 2 weeks left until I go to Malaysia, I have a lot of complicated things to take care of right now. For example, I need to sort out my Malaysian visa issues. And my wife and I started a small company in the United Kingdom and have been running a corporation there. But now we're planning to set up a limited company in Singapore and move our business from the United Kingdom to Southeast Asia. So I'm really busy and overwhelmed trying to take care of all these complicated things. I'm also running the Meisman membership, so even if I had 10 bodies, it wouldn't be enough. That's why I'm planning to keep the Meisman broadcasts as short as possible and only include the essential information you need. Please don't think that I'm making the broadcasts carelessly these days. I hope you understand that I'm just going through a very busy time right now. Alright, then let's start today's Big 2 News, coming to you on Monday. Mijuan family, I hope you all had an enjoyable and relaxing weekend. The Mijuan channel had a pretty busy weekend. 3 new videos were uploaded over the weekend, and among them, the video we sent out on Saturday afternoon had a particularly eye-catching title. I told you that the fastest United States stock news in Korea is right here. There are still many people who haven't watched this video yet, so let me make a quick announcement about this first. This morning, Chief Executive Officer Kim In-jung sent me a pleasant message. Apple News has launched its beta service today as scheduled. Starting tomorrow, major companies will begin announcing their earnings, and I'm looking forward to seeing how they turn out. This morning, I received a short but very pleasant message saying, "Thank you for always being with us." If you look here, it says Apple News, but what Apple News actually stands for is Edgar Flash News. Now, let me briefly explain this part. Let's go in directly and see what kind of announcement has been posted. The beta version of Edgar Flash, an artificial intelligence investment news service for investors, has been launched. Let's take a moment to read it. Choice Stock United States is launching a new investment news service, Edgar Flash, in beta for investors. The most important thing in investing is to accurately determine the timing of when to buy and sell. However, the reality is that individual investors have difficulty accessing fast disclosure information, making it hard to catch the right timing for trading. To meet these investors' needs, Data Hero has developed Edgar Flash, a real-time investment news service based on an artificial intelligence investment analysis system, following their previous all-stock trading signal service. Edgar Flash is based on the United States Securities and Exchange Commission, which we call the Securities and Exchange Commission. It's a news service where artificial intelligence provides real-time comprehensive analysis by combining the Securities and Exchange Commission's 8K electronic disclosures with Data Hero's NASDAQ and ChoiceStackU United States data. That's how you can think of it. Several strengths are explained here, but the most important point is this. Usually, when companies have important information, they have to report it to the Securities and Exchange Commission, which is the United States Securities and Exchange Commission. Now, after making this report, it takes some time before it becomes news. Really important news, like earnings results, gets reported within about 10 minutes. But if it's not such important news, usually it takes 20 or 30 minutes or even more than an hour before it's reported by the media. But the problem is, during that time, the stock price may have already dropped a lot or surged sharply. So for individual investors like us, it was really difficult to make investment decisions at the right timing. Now, this time at Choice Stock, with the development of a news service called Edgar Flash, we as well, just like institutional investors, we can also receive news immediately based on the announcements reported to the Securities and Exchange Commission. I think it would be good for us to understand it this way. So where can you actually go to use this service? If you go to the Service Discovery menu, you can receive news and investment notes for the stocks you've registered as favorites under News Investment Note. That's how you can see it. Let me go in for a moment and show you. This is the main page of Choice Stock right now. If you scroll down, there's a news section here, and at the very bottom, there's an investment notes section. So you can go in through here, or you can go in through the investment recipe. Now, if you go into the investment recipe, you'll see the news investment notes here. Just click here. Now, there are two sections, and among them, it's the news. From now on, in this news section, you'll see announcements about the various stocks you've set as your favorites. You can receive notes organized by artificial intelligence in real time like this, and you can see that the ones with the logo of the stock are all news summarized by artificial intelligence. If you look here, there's an example. Let's click on it. Now you can see a news article saying that there's a risk of being delisted from Nasdaq. If you look here, there's also a 3-line summary. This is a service where artificial intelligence organizes only the key points and provides us with very important information. You can receive this part yourselves. Now, the reason we formed a partnership with Choice Stock, which is improving day by day, is for the subscribers who are with the Mizon channel, and from my perspective as well. I think this is a really great fortune. Now let's officially go over the summary of the United States stock market over the past week. First, we need to check the S&P 500 map. I've set the S&P 500 map to show the past week. How was the United States stock market over the past week? Well, it wasn't completely positive, but there were some stocks and sectors that went up. On the other hand, it looks like there were a few more sectors and stocks that went down. So it was a mixed market, but despite the mixed trend, there were a few more stocks that went down. Especially since Friday also ended with a downward trend, you can see that the upward momentum from earlier in the week didn't continue. Especially if we look at the tech stocks we care about, it seems like there were a few more stocks that went down. Especially in the software sector, a lot of stocks dropped significantly. But the companies we care about, like Nvidia, Palantir, and Advanced Micro Devices, had another strong week as artificial intelligence beneficiary stocks continued to perform well. That's how we can sum it up. In fact, if you look at the changes in major United States indices over the past week, most of them ended in the negative. Among them, the Dow Jones performed the worst, dropping by more than 1%. Microcaps fell by 0.98% and midcaps dropped by 0.55%. In contrast, the Nasdaq 100 dipped 0.36% and the S&P 500 slid 0.28%, indicating a slightly negative market sentiment. But it didn't drop significantly, so that's how we can sum it up. Examining performance by sector reveals a similar trend, with several more sectors experiencing declines. Financial stocks dropped by 1.94%, performing the worst. Communication services dropped 1.88%, consumer staples fell 1.67%, real estate declined 0.5%, and tech stocks slipped 0.43%. The market breadth is still okay for now. It dropped a bit on Friday, falling from 72 to 67. And if you look at the long-term trend, it has slightly decreased from 61% to 59% and then to 56%. Now let's examine the volatility index. It remains at a very low level of 17.37, and the 200-day moving average is at 19.64. As I mentioned to you last week, when the volatility index moves below the 200-day moving average, there's no need to worry about a major downturn yet. The market is still in a healthy state. That's the main point we can summarize. Next is the Fear and Greed Index, which measures the market's fear and greed. Just like last week, the market is still in an extreme greed state. It's still holding at 75, so for now, it's necessary to maintain a cash position. I'd like to give you some advice once again. The same goes for market score, right? The market score provided by Choiceduck? It's already risen to 97. If it's 97 out of 100, that means greed is overflowing and it's heading toward the worst possible situation. Now the market is filled with euphoria. Of course, it could go even further from here. However, rather than the risk of rising, it's clear that the risk of falling is gradually increasing. This doesn't mean I'm telling you to sell all your stocks. You all have a target cash ratio, right? So if your target cash ratio is 20%, then 20%. If it's 30%, then 30%. Personally, I think it's best to make sure you maintain that ratio. Next, let's look at the performance of Mijuwon's top picks. Compared to the overall market sentiment over the past week, Media One's top picks performed really well. Especially stocks related to Bitcoin did very well. B2 rose by a whopping 16.06% in just 5 days. And as of now, it's up an additional 6.41% in after-hours trading following Friday. The reason is, if you look below, you'll see that the price of Bitcoin has finally surpassed 121,000. That's an incredible trend. So over the past week, Bitcoin has shown an amazing performance, rising more than 9%. So Coinbase must have done well too. It went up 8.79% over the past week. Strategy also rose 7.57%. So you can see that the top 4 stocks, first, second, third, and fourth place, are all Bitcoin related stocks. Advanced Micro Devices rose 6.17%, Palantir was up 5.76%, and Creative Technology increased 5.25%, all showing strong performance. Nvidia is doing well too. With an additional 3.5% increase, its monthly return has surpassed 15% in just 1 month. Vistra was up 2.28%, Uber up 1.88%, and Trade Desk rose 1.3%. Celestica gained 1.11%, Amazon rose 0.72%, and Google edged up 0.37%. The other stocks fell, with Meta dipping 0.21%. Broadcom was down 0.29%, Tesla down 0.58%, TSMC down 1.87%, Talos Energy down 3.54%, and Nextracker down 6.95%. Lastly, Persla dropped by 12.21%, showing the weakest momentum among the non-supported top picks. Today, for the first time in a while, let's do a technical analysis together on the non-supported top picks. I regularly check the stock price levels of the non-supported top picks. I compare the current situation with the 200-day, 50-day, and 10-day moving averages, which represent long-term, mid-term, and short-term trends. Now let's take a look at the main points for today. The first image, there are 3 images in total. The sorting standard for the first image is the 200-day moving average. You know the stock prices over the past 200 days, you just add them all up and divide by 200. That's how you can think of it. Now, this 200-day moving average is a very important technical indicator for identifying the long-term trend of a stock. There's even investment advice that says you shouldn't even look at stocks trading below the 200-day moving average. It's that important of a trend line. As of before the market opens on Monday, July 14th, currently only 3 stocks are trading below the 200-day moving average. Take a look for yourself. Here, you can see a comparison between the recent stock prices and the 200-day moving average. Most of the stocks in the median topic are in the positive. At the bottom, you can see Tesla's stock price is down 0.86% compared to the 200-day moving average. First, solar is down 4.77%, and what about the trade desk? It's still down 18.78% compared to the 200-day moving average. So this means that the long-term trend of these 3 stocks still hasn't fully recovered yet. That's how you can see it. And what about Tesla stock? The relative strength index has also dropped to 49. And compared to the 51-day moving average, the stock price is also 2.05% below it. So you can see that this is the only top pick that's generally in a downward trend. Now let me show you the second image. Here, the sorting standard is the 51-day moving average. The 50-day moving average is a standard that allows us to look at the short-term and mid-term stock price momentum. Institutions and people who do quant investing, when rebalancing, they often use the 50-day or 60-day moving average. So, you can see it as a very important trend line that can determine the mid-term direction when it breaks below or recovers above it. Alright, then let's go up and take a look. We can move on to the next image. Now, here we've compared the stock price with the 51-day moving average. Now, the good news is that except for just one stock, Tesla, all the other stocks have their prices above the 51-day moving average. So both the short-term and mid-term trends are generally looking good. Now, however, there's one stock that stands out a bit, and that's Solar. Solar's stock price has dropped a lot recently, hasn't it? The stock is currently just above the 51-day moving average, meaning a slight drop could cause it to break below this level. So we need to watch and see if the 51-day and 61-day moving averages can act as support levels. If Paracel breaks below both the 51-day and 61-day moving averages, although disappointing, it might be necessary to cut losses. That's my personal opinion. Now, on the other hand, if the stock price is more than 20% or 30% above each of the 10-day, 50-day, and 200-day moving averages, on the contrary, this means the stock has become excessively overheated. In the short term, it can signal that the stock has peaked. Because for these kinds of stocks, there's a high possibility that profit taking will occur in the short term. Because, as I keep saying, each investor has a different investment period. Some people invest with a short-term view, like a week or a month, so when the stock price rises 20 to 30% above the 2-day moving average in a short period, that's what it means. There are many people wanting to sell these stocks. From the viewpoint of long-term investors like us, we need to be cautious about making additional purchases. If you wait a little longer, there might be a chance to buy at a slightly lower price. That's how you should see it. Now, you actually need to make decisions by looking at various indicators. Relative Strength Index is one of them. You can check for short-term overheating signals through the Relative Strength Index, And as you all know well, if the Relative Strength Index exceeds 70, it is considered an overbought zone. This means that the stock price has risen excessively in a short period, increasing the likelihood of profit taking. Now, there's one more thing we need to look at, and this is very important. It's about the driving force behind the rise. We need to look at why the stock price is going up like this. We need to distinguish whether the current rise in stock prices is based on solid performance growth and positive outlooks for future value, meaning fundamentals, or if it's due to speculative demand riding on a particular theme. What about a rise that's supported by fundamentals? Even if there's a big gap like this, there's a possibility that the trend could continue. So we need to determine exactly why the stock price suddenly went up like this, whether there was a change in the company's fundamentals or if it's just a good atmosphere without any real change. So if there hasn't been any significant improvement in the fundamentals but there are signs of speculative overheating, from a risk management perspective, you should consider a strategy of selling some of your holdings to lock in profits. Now, on the other hand, if strong growth momentum is confirmed, if the market's interest continues, you should keep holding until the trend reverses to maximize your profits. Therefore, it's important to look into the reasons why the stock price has gone up. Now, let me explain a bit more by looking at some specific examples. Credo Technology is mentioned here. The reason is that right now, compared to the 200-day moving average, the stock price is up by as much as 72.96%. That's not all. Compared to the 50-day moving average, the stock price is also positioned 37.53% higher. And the Relative Strength Index has far surpassed 70, reaching up to 73. Therefore, this can be interpreted as a typical sign of overheating. The gap between the 200-day and 50-day moving averages is very large. Since the Relative Strength Index has exceeded the overbought level of 70, there is a very high possibility of a short-term price correction or a period of adjustment. Now, but Credo, recently, thanks to the explosive growth of the artificial intelligence market and the reduction in investment risk, the stock price has surged. Well, you probably remember this too. The dependence on specific clients is decreasing. Originally, almost 80% of the revenue came from just one company. But recently, they've secured several more major clients. As a result, the stock price went up a lot. So you could say that the rise in the stock price was due to a change in fundamentals. So even though there's a strong growth story and fundamentals have improved, from a technical perspective, when the market needs to cool off from short-term overheating, it's better to hold off on making additional purchases. There's no need to sell your stocks. However, for those who want to buy right now, I personally think it's better to wait a little. Palantir is next. Its stock price has surged lately, trading at a level 61.52% higher than the 200-day moving average. However, compared to the 51-day moving average, it's up by 9.19%, and the Relative Strength Index is still only at 58. In the past, there was a strong upward trend as it's much higher than the 200-day moving average recently. The upward momentum may have slowed down or entered a consolidation phase. That's why it only went up by 9% compared to the 51-day moving average. The Relative Strength Index is currently at 58, indicating the current market conditions. The current situation could be viewed as a chance to buy, which is an alternative perspective. So how about analyzing the moving average like this? It's most effective when used not on its own, but together with Relative Strength Index chart analysis, trading volume, and most importantly, the company's fundamentals and industry trends. I hope you remember this part. Now, there's one more thing. We also need to look at the market situation, because if the market turns bearish, individual stocks will inevitably fall as well. But right now, the market is really hot. So in my opinion, even if there's a stock you really want to buy right now, I think the best thing to do is to wait a little bit. Today, I think we should mainly talk about Bitcoin. Over the past week, and probably this week as well, I personally expect that Bitcoin will dominate the market sentiment. As we saw earlier, if you look at the weekly returns, B2, which is a leveraged Bitcoin exchange traded fund, had the best performance. However, if you change the time frame, the names of various different stocks come up. For the past month, as you can see here, Coinbase went up by 54%, showing the best performance. Even looking at the year-to-date returns, Coinbase is up 55% and Strategy has surged more than 50%. Now finally, if you look at the returns over the past year, the best performer was Strategy with 219%, followed by B2, which went up 155%, and third was actually Bitcoin, which rose by 100%. And lastly, what about Coinbase? With a one-year return of 80.34%, it shows the lowest performance among the four. So these four, Bitcoin, BIT, Coinbase, and Strategy, compete with each other, and sometimes one outperforms the others, and at other times a different one leads. They keep switching places like this, showing a back and forth pattern. In the article I prepared today, Coinbase appears. Not long ago, it was included in the United States top picks. There was a very important news report about Coinbase, so I'd like to explain the significance of this news to you in detail. Coinbase? The news is that Coinbase has acquired the DeFi project open market team, and I'd like to explain in detail what this means. First, let's read the short article, and then I'll break it down and explain it to you. The cryptocurrency exchange Coinbase Global, you mean? This time there's a decentralized finance project. If you look here, there's a decentralized finance project called DeFi. It was reported that they acquired talent from the leadership team of one of those open market projects. If you look here, in English, it's called a talent-only acquisition. It means they left the company itself and only brought in the people. Coinbase explained this acquisition through a blog post. They explained that this will help advance on-chain market infrastructure and accelerate our efforts to bring more exchange business on-chain. You might not really understand what this means yet, and they also said that expanding the integration of on-chain infrastructure opens the way to a faster, more transparent, and more accessible market. They themselves are saying that the open acquisition is a step further down that path. Now, let me explain the meaning of this article in a way that's a bit easier to understand. So to sum up, this acquisition of the open team is Coinbase is not resting on its current success. You can see this as a strategic investment for Coinbase to become a key player in the future decentralized financial system, what I explained earlier as DeFi. Alright, first of all, there are a lot of difficult terms coming up. So let me start by breaking down the concepts in an easy way. Currently, most cryptocurrency exchanges like Coinbase play a role similar to that of banks or large securities firms. Cryptocurrency investors trust and rely on a specific company like Coinbase to deposit their assets, and just like using a securities firm to buy and sell stocks, they use it to trade cryptocurrencies. When a specific entity, in this case Coinbase, manages everything around itself, this method is called a centralized exchange. Centralized exchanges are similar to the banks we use. They're very convenient and easy to use. However, the entire process is based on complete trust in the exchange as an intermediary. So if we pause for a moment and think about it, it's actually quite strange. For example, in my case, I send an allowance to my parents who live at the harbor every month, and it would make sense to just give them the allowance directly. But strangely, a bank gets involved in the middle. When I give the money to the bank then sends the money I gave them to my parents. And in the process, they take a fee, make a profit from the exchange rate, and end up taking a lot of money. It's a very strange system. So even though it's convenient and easy to use like this, but in reality, this is only half of what blockchain aims for in direct transactions. Blockchain pursues P2P. What that means is, let's do direct transactions and remove the banks in the middle. You can see this concept as the main ideal of blockchain. So, Coinbase is a very unique case because it buys and sells assets based on blockchains like Bitcoin, but its structure is actually the opposite of blockchain. That's how you should see it. So, the structure that is the opposite of a centralized exchange is a kind of marketplace with no owner. This is a peer to peer or P2P marketplace where people trade directly with each other. We usually call this a decentralized exchange or decentralized exchange, short for decentralized exchange. In these places, people who want to buy and sell digital assets meet directly and trade without going through an exchange. So there are no fees. Furthermore, in these marketplaces, people not only buy and sell cryptocurrencies, but also lend digital assets to earn interest or bundle various assets together to create new products. A variety of financial activities take place, and we call all of this DeFi, which stands for decentralized finance. Now, what is Coinbase's new strategy these days? It's all about DeFi, seeing its potential for future growth. It's to jump directly into the peer-to-peer marketplace. That's how you should see it. So right now, Coinbase's way of operating is actually the opposite of DeFi because it's centralized and controlled from the center. However, it can be understood that Coinbase has a bigger plan to build an on-chain financial infrastructure itself so that investors can come to these peer-to-peer marketplaces more comfortably and safely. That means Coinbase aims to go beyond just being a centralized crypto exchange and is looking to build an on-chain financial infrastructure that operates directly on the blockchain. Now, by securing DeFi experts like those from Open, it's expected that they can accelerate the development of their own on-chain infrastructure. Currently, in the cryptocurrency market, centralized exchanges like Coinbase and decentralized exchanges like Uniswap coexist and compete with each other. This acquisition is a very smart strategy for Coinbase to become a strong player, not only in centralized exchanges, but also in decentralized exchanges by absorbing DeFi technology and talent. That's how you can see it. So what that means is this. In the long run, it means that Coinbase will not be left out of the growth of decentralized finance. In fact, it can be interpreted as Coinbase aiming to become a main player in this trend. I'll wrap it up like this. What's the last content prepared for today? It's today's United States stock video. The video I'll be sharing with you today features a Bitcoin expert. According to this expert, the price of Bitcoin will surpass $200,000. That's quite an impressive outlook. For your information, Bitcoin's momentum right now is really intense. It has risen up to 121,000 now. Let's take a look at the technicals. If you look at the current momentum indicators, out of 26 indicators, 2 are suggesting sell, 7 are neutral, and 17 are indicating buy, showing a very strong momentum with a strong buy signal. Of course, since the relative strength index has risen to 78, there is a possibility of a technical correction. But if you look at the chart, even if a technical correction does occur, it will likely be very brief, or it might not happen at all. Let's take a quick look at the chart to see why I'm saying this. Now, if you look at the Bitcoin chart, the 1-year chart shows the stock has been trading within a narrow range for the past year, making it a dull and uneventful period. But if you look here, it finally broke out to the upside. So as it broke through the box range that lasted for a year, you can see that there's some strong momentum showing up now. So the technical aspect looks really good as well. And with the overall fundamental supporting it, let's take a look in this video at the argument that there's a high possibility of breaking through $200,000. That concludes today's broadcast. Thanks for tuning in to the first broadcast of the week. I've been asking you since last week, and your warm comments, questions, and various feedback really give me a lot of help and strength as I run this YouTube channel. I also ask for your likes, warm comments, and any messages of interest. Let's all keep fighting together until the day we all succeed in investing in United States stocks. Have a happy day. Thank you.
Bitcoin has set a new record by surpassing $3,000 for the first time at Christmas. We have invited Bitwise Chief Investment Officer Mayet Hogan and Yahoo Finance reporter David Holleris. Mayet, what do you think about this recent surge? Is it because of the connection with tech stocks, the White House's pro-crypto policy, or the ongoing enthusiasm in the market?
The two factors you mentioned do play a part, but the bigger point is that massive demand has met limited supply. Right now, companies are buying up Bitcoin on a large scale, and ETFs are also purchasing huge amounts of Bitcoin. But there isn't that much Bitcoin actually circulating in the market. In the last month, Bitcoin ETFs have bought $5.2 billion in Bitcoin. This means that institutional investors are now seriously allocating funds to this market. This trend is expected to continue, and with limited supply, it will inevitably drive prices up. In my view, Bitcoin has totally detached from the $100,000 level, and I think it could potentially go significantly higher. For the past 6 months, Bitcoin has been around $100,000, staying within its gravitational range. Once it breaks out of this zone, it's hard to predict what will happen. However, I anticipate it surpassing $200,000, which may seem like a significant figure. Considering that the inflow of funds from institutional investors and companies is very strong, hasn't slowed down, and is actually accelerating, I believe this level of increase is entirely possible. Along with the inflow of institutional funds, there is also positive news coming out of Washington. What we're hoping for is that the Genius Stablecoin Act, which passed the Senate in a bipartisan manner, will also pass the House and be signed by the president. This could really kick off Wall Street's entry into crypto. Another one is the Market Structure Act, also known as the Clarity Act, and we hope to see progress on this in Congress as well. If these two bills pass within this year, the crypto industry will have a much stronger foundation, the inflow of Wall Street funds will accelerate, and the risks of fraud or bankruptcy like in the past will be greatly reduced.
I'd like to ask a bit more about the flow of funds into Bitcoin. Last year, the main story was about Bitcoin ETFs, but this year, it seems that companies buying Bitcoin are getting more attention. What do you think about companies that hold Bitcoin as part of their treasury? In fact, it seems that some of these companies are buying Bitcoin at a faster pace than ETFs. What do you think about that?
That's right. This year, that's really the case. Right now, it's like two horses pulling a carriage together. In recent months, companies have acquired around 160,000 Bitcoins, matching the total net increase in Bitcoin supply to the market in 2023. In other words, they've absorbed the entire annual supply in just one quarter. Of course, there are some skeptical views about this trend, but within the industry, there are already a flood of trading proposals for the third quarter, and it's highly likely that the scale will surpass that of the second quarter. Therefore, I believe this trend hasn't peaked yet, but is actually accelerating even more.
What do you say when your friends or family ask you why you hold Bitcoin? Is it because it's a smart investment and a store of value, or is it for diversification?
All three reasons, smart investment, store of value, and portfolio diversification, are correct. But the way I think about Bitcoin is very simple. Most people are exposed 100% to dollar-based assets, stocks, bonds, even their salaries are all tied to the dollar. But the United States debt and fiscal deficit are at unsustainable levels. In the end, I think people need to have some exposure to alternative assets, and among those alternatives, Bitcoin is the fastest and most powerful option. I don't advise my acquaintances to put 50-70% of their portfolio into Bitcoin. However, right now, most people have 100% of their assets in dollars and 0% in real assets. So I think holding even a small percentage of Bitcoin was good in terms of returns, had a low correlation, and also served as a kind of insurance against fiat currency risk. For me, it's a reasonable choice. I believe Bitcoin can become an international medium of exchange, but even if it doesn't become a currency, just as a store of value like gold, it has the potential to be worth over $1 million per coin. In reality, nobody buys coffee with gold. I think Bitcoin could possibly be used as a currency around the 2030s, but that would only happen after its price has risen much higher. Right now, its main role is as a store of value, and its function as currency is really just a bonus option. I think it's an investment with a high probability of success and the potential to grow tenfold.
Let's continue by talking about stablecoins in terms of their function as a medium of exchange. Banks and fintech companies are all preparing their market entry strategies ahead of the passage of related legislation. When do you think the full-scale adoption of stablecoins will become a reality?
Honestly, I've never seen things move this quickly before. Even the United States Treasury Secretary says that this market could grow tenfold within the next 3 years. It's rare for the government to predict that a particular industry will grow tenfold in just 3 or 4 years. I believe Wall Street will enter a sort of arms race to get into this market. Of course, it will take time for stablecoins to completely replace the existing financial network, but large-scale investments will begin much earlier than that. Wall Street firms have taken notice of Circle's oversubscribed initial public offering, which saw the highest stock price increase this year. Another major issuer, Tether, is generating annual profits of tens of billions of dollars. And seeing this, Wall Street firms are deciding that they also need to take a share of this market. Therefore, once regulations and legislation are passed, major Wall Street firms will all enter this market at once.
The start of frequent dreams is important. Let go of greed, grow little by little every day, and enjoy today's journey. I'm not afraid even if dark times come. Retire with United States stocks.